What's up guys, it's your Money Cat here. Thank you so much for joining me. In this video, we're going to talk about how to trade through earnings reports. We're currently in the middle of a really busy earnings season, so hopefully this video will help some of you guys out. Before we go on though, click that like button and subscribe to the channel for more stock analysis and information. Now, my initial answer may disappoint some of you guys, but I personally choose not to trade earnings reports. I'll give you two reasons why, and I'll also give you two ways how you can combat those reasons and to trade earnings reports if you choose to. So reason number one why I don't trade earnings reports. Personally, I just find it too difficult to factor in so many different things. Let me explain. Earnings report is not just about the revenue or the profit of the company. It includes those numbers, but it also includes the earnings call, forward guidance, and also how the investors feel about all those things combined. I've had many cases where the earnings and the profits, revenue, all the numbers, they are great. I predicted them correctly. Yet, because of poor guidance or something about the earnings call the investors didn't like, the stock would actually go against me. And vice versa, it may report okay to poor numbers, but because of something in the earnings call or whatever, the investors have good sentiment about it, and the stock would actually shoot up. It is too hard to predict in my opinion, and I want to keep my trades as simple as possible without too many factors that can affect the outcome. This is despite the fact that my career best trading day came from trading an options call on Facebook earnings report. I was able to make about $24,000 in one day, yet I just don't feel like I have a good grasp of predicting not only the numbers, but the guidance, the call, the sentiment, and again, it's just too many factors that can go wrong. Now, if you feel like you're really good at predicting earnings and time again, you are able to predict it correctly and make profit, more power to you. Keep trading those earnings. Everybody has different strategy. Reason number two why I don't trade earnings reports. I'm an options trader, and there's this thing called IV crush, meaning after the earnings report, volatility just dies, bringing the option value down with it. I talk about this in my Option Greeks video, which I will link right here and in the description box as well. So please go check that out if you are not familiar with Vega, volatility, and IV crush and what it can do to the option value. So now, on top of all the reasons I talked about in reason number one, now there's even more hurdle to get through in the name of IV crush and decreasing volatility. It seems to me like there are just way too many hurdles to jump over to try to make a profit. And now, two ways you can trade through earnings report without these issues that I talked about. Number one, if your long-term view of the company will still stay positive, even if it misses its earnings, then it would be safe to get into a position, a long position, because if it misses its earnings and the price drops, then all you have to do is buy some more at a cheaper price because your long-term view has not changed. A second way to trade through earnings report, this one's more for options trader, is to buy options for its competitors in the same sector. What I mean is, for example, usually bank stocks trade very similarly. So if, for example, JP Morgan has an earnings report coming up tomorrow and Bank of America does not, then instead of buying options for JP Morgan, where you might get that decrease in volatility and thus eating away at your option value, buy one for Bank of America where you don't have that volatility drop, but you'll likely get a similar move up if JP Morgan does well. I've found that sectors like banks, airline stocks, they usually move together up, and also they bring each other down depending on how they report. Now, on the other hand, even in the same sector, if it's a direct competitor, it'll have the opposite effect. We actually had a really good example of this last week when Intel reported its earnings. Intel reported really poor earnings, and I believe it dropped down about 9%. But you know what happened to AMD, its competitor? There was no direct news about AMD that day, but after market, it shot up because Intel reported so poorly. And AMD ended up about plus 15% the next day. So instead of buying puts on Intel and having some of its value get chipped away from IV Crush, you could have bought calls on AMD instead and have same kind of effect without any decrease in volatility affecting the option price. How do you trade through earnings reports? Let me know in the comment section below what your strategy is and how much success you've seen from it. Thank you so much for watching, and I wish you guys best of luck if you guys choose to trade through the upcoming earnings reports of many companies yet to come. Until next time, stay green, and I'll see you next time. Bye.